welcome to your Monday Futures Market Outlook for June 24th, 2013. This is Patrick Serezna. As always, we start off with the U.S. dollar index futures, and we had a short-term low come right in here. It didn't break to a lower low, and certainly have now done a very deep retracement back up. We continue to be very neutral on the U.S. dollar. We were originally quite optimistic, but at this juncture, we want to really see how the trends develop in the yen and the euro in order before we are quick to get bullish again on that U.S. dollar. The key thing is we're certainly not bearish the U.S. dollar. We simply want to see further technical evidence to suggest that it is going to resume back in its original trend higher. So we'll watch to see that. We want to make sure that all pullbacks on the U.S. dollar are holding into that 82, 81.50 area, and that it can continue to build upon its recent strength. Next here, I want to take a look at the euro futures, and the euro has had that breakout to a higher high right up along this breakout trend right in here, and that originally had us neutralize our bullish U.S. dollar stance. But we're going to get some very valuable information as the euro now is approaching a key level of support right around this 31 level, where if there is going to be a short-term bottom on the euro, it is likely to develop right in here. If we have a scenario where the euro is able to bounce off of a support here, there's plenty of room for the euro to strengthen back up toward its highs or even higher, and so this will be very important to find out how the price action develops here. If we see that euro deteriorates even further down to 130 or 129, then that would give us indications at that moment that a far more bullish U.S. dollar scenario could become or start to develop. Next here, I want to take a look at copper, and copper has now broken to a lower low and has hit $3. This is a pretty bearish indication at this juncture. There is even downside risk even as low as 280 to 270 on the downside if we do a couple of different measured moves down over there. And now we are oversold. If at some point the market does bounce, we could always see a move back to 323 and a quarter before it reverses back lower. But at this juncture, it's a relatively bearish trend, and we don't want to imply a buying opportunity here beyond maybe a short-term swing trade. Next here, I want to take a look at gold prices, and gold has broken a key level around this 1350 area and is now proceeding to finish the next measure move lower. We've been suggesting there are two levels, this 1250 and 1200, that are our downside targets now that we've broken to lower lows, and so we're going to be watching to see whether or not gold can put in a short-term bottom right down along these lows. One way or another, we think that even if gold does hit a short-term bottom, even and subsequently rallies, it will likely retest that low again. The bigger picture buy on gold may lay much later in the summer, so even though we may be coming to an important price level, it may not be necessarily a great idea to be overambitious in accumulating aggressively down at that lower level. Next here, I want to take a look at crude oil, and crude oil came right up to the overhead resistance. We gave scenarios where we thought that crude could have had the strength to maybe even muster up a test of 100 or 102 on the upside, but clearly the intermarket shift that was caused by the turning of the global markets certainly was enough to put in a short-term top on oil. While we haven't necessarily seen anything outright bearish on oil, it is sort of at a very neutral stage. It's sort of tested the upper end of its trade range, and there is room for it to go and gravitate to the bottom end of the range, particularly if the trend of the stronger U.S. dollar develops. Now, we don't necessarily believe it's a high probability, but there is always a chance that crude will come back for a full retest of these lows. But it is likely that a retest of 92 is probably a good bet at this moment, and see a much deeper low pullback into that 91, 92 range for maybe a short-term swing low on oil. We're not bearish oil at this point, but further weakness could happen. Next here, I want to take a look at the 10-year Treasury bond, and the 10-year Treasury bond has outright crashed We've seen the 128, 129 handle of support give out, and we've very quickly dropped about 4 handles lower in a very rapid fashion. There's not even a major technical support that's immediately evident. We may find that this consolidation zone could put in a short-term low, but there's something dynamically that has shifted in the bond market, and we always want to remind people that the bond market is considerably larger than the stock market, and if we are seeing a major shift in the credit markets, there's going to be some substantial implications or ramifications to the equity markets. So this is something that we can't ignore. It was not something that we were expecting to occur, and therefore we have to go and develop some theses about the market based upon this new information. Finally, I want to get into the S&P 500, and we're at a very crucial moment right now. Not only have we now broken the 1600 level where the 50-day moving average lay in the previous lows, but we also failed to make a higher high. These are very typical topping formation style patterns that developed, and we're really at this moment only 3 days into trading below the 50-day moving average. And while we are reaching an important level right around this 1550 where we could get a short-term bounce, we cannot emphasize enough that if this is when there's genuine risk of things like market crashes to really develop, as traders become very fearful that the party has ended. There creates that bottleneck selling where the sellers overwhelm the buyers and everyone's too scared to buy, which creates that imbalance that could really have some very rapid style volatile selling. So we were warning everyone to be cautious here. And, we'll be looking to see where a short-term bottom develops and subsequently a buying opportunity, but I would say it's far too premature to be fishing for one right now. Let's just see how low the market goes. There is a very important support line coming toward 1500 and 1450. We don't have to see a market that drops to that magnitude, but we certainly would think that a legitimate buying opportunity could develop down in these zones. And so let's be patient and see what the market delivers over the next 48 hours or so. That was your Monday Futures Market Outlook. Thank you for joining me.